Hi guys, welcome back. Right now we're going to look at a depreciation problem. We're going to be depreciating an asset in two different ways in this problem. We're using the straight line method and we're using the 3 years macro schedule method. And to show you exactly the difference between them, let's first start the problem, and we're going to start off with the straight line depreciation method. So straight line depreciation means that we're depreciating our asset by the same amount every year for its lifespan, and our asset is $550,000 worth of chemical machinery. And to figure out exactly how much that is for each year, because we're only worried about the first year, but since it's straight line, they're going to be depreciated the same amount every year, so we still have to figure that out. So we're going to put in the $550,000 into our Calc BA2 Plus, and we're going to divide that by the life expectancy, which is 5 years. And this gives us $110,000 in depreciation every year. So let's store this in 1. So before we get to use this figure, we have to actually figure out what our revenues is and what our expenses is for that year. And it's given very simple, very straightforward: $600,000 in revenue per year and $300,000 in expenses other than depreciation that year. So just for posterity, we're going to take the $600,000 and we're going to subtract it by the $300,000, and it leaves us with $300,000 left over. Then we're going to actually subtract out depreciation. So we call 1, bring back depreciation, subtract it from the $300,000. That gives us $190,000. Now we have to take taxes out. So our tax rate, effective annual tax rate, is 30%. And that's how much we pay, but we have to know how much we keep. So we actually do 1 minus 30%, or 1 minus 0.3, which is 0.7. So we'll multiply this by what we keep, which is 0.7. And we keep $133,000 is our net income for that year. So for the straight line depreciation method, our net income is $133,000. All right. And now to figure out our cash flow for that year is actually, we're going to add back the depreciation value. So we're going to recall 1 and add it to our net income, and we get $243,000 is the cash flow for that year. All right. And now to give you a really good sense, and also why depreciation matters, and also the difference between how you depreciate two assets, or even if they're the same, we're going to do the macro schedule. So we're going to do the same thing we did before. We know right off the bat that our revenue minus our cost for that year is going to give us $300,000. And we're going to store this in 1. And now let's depreciate our asset in a different way, following the macro schedule, which clearly shows that in year 1, we're going to only depreciate our asset by 33%. Okay, so we're taking back our calculator. We're going to take the value of our asset, which is $550,000, and we're going to multiply that by 0.33. And we know that our depreciation of our asset for this year is $181,500. So we're going to store this in 2, and we're going to recall 1, and we're going to subtract it from recall 2, which is our depreciation. They give us $118,500. And then we're going to multiply it by our effective annual tax rate. And remember, it's 1 minus the effective annual tax rate, because that shows how much we keep. So 1 minus 0.3 is 0.7. So multiply this by 0.7. And for that year's net income, we get $82,950. All right, sweet. And now to find our cash flow back, find out what our cash flow is for that year, we just add back the depreciation value. So if I store this in 4, because I don't really remember where I saved the depreciation value. Was it in 1? No, it was in 2. All right, so we take the depreciation value and we add it to our net income, and we get $264,450. $264,450. So if you notice, between the two methods, the straight line and the 3-year macro schedule depreciation methods, you can see that our net income is different, and so is our cash flows. Our depreciation for the straight line, we technically depreciated 20% of our asset in the first year. And because of that depreciation, because all the other the revenue and the expenses and the tax rate are all fixed, doesn't change between the two methods. The only thing that changed was the way we depreciated. We can see that in the straight line method, we actually show a higher net income than if we use the macros method. And then we can also see, though, that if we use the macros method, we show a higher cash flow than we do if we use the straight line method. I hope this wasn't too long, and as always, I hope it was educational, and I hope you enjoyed. Thank you.